I sell, bitch, we living life. Snake.
Hey everybody, it's Luca here from Better Bull. Just wanted to get this slideshow out to you guys that I made the other day called the China Hustle 2.0. We're going to get into a fraudulent scheme that was put on by over 300 Chinese companies back in like 2009, 2011 time period. Here's some informational info. All these underlined words will take you to the links that I'm going to mention soon. I will post a share link to this slideshow in the comment section of this video. So first off, we have the China Hustle 2017 documentary. And this was a great documentary that outlined what actually happened during that time period. And quick example, a lot of these Chinese companies were IPOing to raise money through their IPOs for themselves. And after their IPOs, we're starting to inflate revenues to keep the stock moving, to keep making more money for themselves. One example would be Orient Paper. It was a up-and-coming IPO, just IPO. They were reported to be doing $150 million worth of transactions involving paper a year. And Muddy Waters Research, which we'll get to soon, they went to China and checked on their biggest manufacturing building, and the roads couldn't even support trucks that would have had to have been going in and out of this manufacturing building had they had been producing the paper they were talking about. They went inside the building and there was maybe 20 to 30 employees and a bunch of garbage equipment, and outside their $5 million worth of assets was just a huge yard of old cardboard. It was a joke, but definitely check out that documentary. It's a quick hour, 24-minute documentary. Great knowledge. Here's a link. This is Muddy Waters Research, who actually is one of the two short seller firms that were in the China Hustle and actually were the ones that called out all these Chinese companies back in 2010. Some of their notable ones: Orient Paper, a company that said they were producing over $150 million worth of paper a year, and their one main manufacturing building was a piece of garbage with maybe 25 employees and garbage everywhere. It was complete fake. This is a TAL Education, a real business with fake financials, part 1. Great video, 13-minute video, and it will really explain to you Muddy Waters' point of view and what they have found on why TAL is one of the biggest shorts probably ever. Right here are TAL SEC filings. You can see all their filings here. VIE structure info. We're going to get into what those are soon. And then the Muddy Waters Luckin Coffee research. This is another thing I love. I'm not sure if everybody knows what happened with Luckin Coffee. We're going to get into that in a few more slides, but it happened on April 2nd, 2020 is when Luckin Coffee fell off a cliff. Muddy Waters put out a report in January about it, and their research for TAL was back in 2018, yet it's this thing still going up. Nobody cares what they're saying. I don't understand it. I really do not. But the story of Luckin Coffee, guys, it was a Chinese coffee company that was rumored to be the Starbucks of China. Everybody in the US wanted to get a part of it. Their financials were beautiful. It was a great company. IPO'd at 20, reached all-time highs of 50. It has been above 30 for all this time. Yeah, well, on April 2nd, 2020, Luckin Coffee filed that they were being investigated for revenue inflations of around $340 million, and the stock in the morning of that day fell from $25 to $6, an 85% drop that morning. I mean, I was looking at the option chains, the puts that morning. You could have bought puts for anywhere between $1 and $100, and they were worth north of $15,000 or $1,500 each. That is insane. That is crazy returns on your investment, and that's what we're looking for here in TAL. So yeah, here's your chart for Luckin. So yeah, so the IPO was back here, but it's kind of just stayed steady. It was nice. It was very strong at this 20 where it IPO'd. comes up, gets that little pump of some good financials that ultimately ended up being fake, but gets up to 50. And look, then it starts to decline when everybody's kind of like scared because some stuff came out about fraud and some people were investigating it. Not many. There was only like 1 or 2 firms that were investigating Luckin. And if you go and look at TAL on Yahoo Finance, there is north of 30 firms that have already came out and said, if you have losses of north of 50 to 100,000, whatever it is, please contact us because they're investigating TAL. This is one of the easiest shorts that I will ever make because Luckin Coffee, to me, opened up the floodgates. What they did was they showed that these companies can still be doing this. These Chinese companies still have the incentive to do this because they make millions to billions of dollars scamming US investors. But so right here, literally morning of the 2nd, 25, if you bought a put the night or at 4 o'clock, if you bought a put on April 1st, you woke up to insane return. Insane. All right, so let's get into the history of TAL Education. It's founded by a young CEO, Zhang Bengzin. He graduated college in 2001, okay? And then he created TAL Education in 2003 at just 22 years old. And other executives in TAL were a bunch of his buddies from college, all right? Right there, they're a young guy. I mean, granted, yes, he could have made a great business. He could have. But it all, to me, seems way too good to be true. Way too good to be true. TAL is up over 780% in the last 5 years. That's insane. That is, if this is reported to be a fraud and what Muddy Waters has done their research on and what they provided to us is true, this company will crumble. Like, my target estimate for where this could be if these fraud allegations do come out, which should in the near future to maybe month, 2 months, this is crumbling to at least below $15. I can promise you $20 would be my max of what this, I think it would go much lower. All right, let's move on. Muddy Waters reports TAL is one of the biggest frauds in history. And we're talking about the company that shorted Orient Paper, which was nothing, or Sino Forest, which is another company that literally IPO'd just to raise money. And they kept making money because they own shares, and they sold shares when the US investors pumped these shares up. Like, it's just such a scheme that these Chinese CEOs, they're going to keep doing it until somebody in America or somebody somewhere will put an end to it and give somebody a very strict punishment that's like makes these CEOs and these rich Chinese people not want to do this because it's so easy. Like right here, Zhang Bengzing's share value on 12/31/15 was roughly 440 million. So at the end of 2015, his share value of TAL, his company, was worth 440 million, around there. Well, in Muddy Waters research, they say that the entire fraudulent inflated revenues started in fiscal year 2016 and carried out to probably right now, okay? Zhang Beijing share value in 2020 is worth more than $8 billion. So by inflating his own revenues because he can, because nobody's going to stop him, he literally made himself north of $7.5 billion out of thin air. Out of thin air. He didn't even have to work for that. Blows my mind. Let's move on. All right, yeah. So right here. So TAL actually IPO'd in 2010. So if you look then, it was around like $2 to $3 a share. And it never saw insane growth. It would slowly move up, down, but it would never really cross this $10 mark. Like, see right here. 12/31/2015. So at the end of 2015, we're going to keep using this date here. This company was at $7.50. Okay. So, wow. Crazy, right? Then, well, you're going to have to do some more research on your own. I attached all the links to this. I'll put this slideshow link in the comment section of this video. Muddy Waters reports that starting fiscal year 2016 to at least fiscal year 2018, they started inflating revenues. So we go here. This is 2016. We get to 2017 here. Then it really starts to take off. comes back down. Then we get crazy uptrend on 2018, get a huge spike from like 30 to like 45, almost 50, right? Well, this big drop off from here to here was actually June 2018 when Muddy Waters first put out their research report on the short. So at first there was a big drop off when they put out this research. It dropped from this 45, it came almost down to 20. But nobody cared enough. Nobody did anything to take action. So this thing keeps on going. Well, now I can assure you that there are many firms, many law firms that are targeting TAL, because what happened to Luckin Coffee opened the floodgates. I cannot say that enough. The amount of, we're already seeing so many new tickers come up about fraud. TAL, IQ, GSX. These are all three that literally have come out in the past week to 2 weeks after what happened to Luckin. I am hoping that we can crack down on these. Next slide. All right, so not sure if any of you guys know this, but almost every Chinese company, I put it in quotes, you'll understand why, listed on the US stock exchange was incorporated in the Cayman Islands. So they're not Chinese companies. They're incorporated in the Cayman Islands. So that means that they are technically Cayman Islands companies. And they do this because it is illegal for Chinese companies incorporated in China to have foreign investors. So it would be impossible for Luckin Coffee, for TAL, for Alibaba, because Alibaba is one too, for all of these companies to list on the US stock exchange unless they're incorporated in a offshore entity. So they use this VIE structure so they can have foreign investors, which, you know what, it wouldn't always be bad, because I understand some companies need that extra inflow of cash, that extra inflow of investments. Fine. But the way that these companies are using the Cayman Islands just seems super fishy to me. So shareholders of these Chinese companies do not actually own any part of the business and have no voting rights. So if you own a Alibaba, a TAL, you do not technically own a part of it. When you buy Starbucks or Amazon, you are a part owner of Starbucks and Amazon. When you buy these Chinese companies, you are buying an entity that is based in the Cayman Islands that's called the parent company. And the way the parent company makes money is from their operating companies, which are the companies in China that are making money. But the problem with these structures is the CEO has full control over all these structure, over this entire structure of whichever company you want to talk about, okay? And basically, the CEO at any point in time, because the only way that the parent company and the operating companies are connected is that they're connected through contractual agreements, which in China multiple times have shown that they are not enforceable. They're basically useless pieces of paper. So at any point in time, a CEO of any one of these Chinese companies can say, I'm making a new business. Completely screw over anybody who owns this entity in the Cayman Islands. Take the operating business or the operating company that he wants to take for himself, and that's all his now, because you do not own any of the actual revenue creating company. You own the entity that operating company is contractually agreed to send all the revenues to them. But there's nothing stopping these CEOs from doing that. It's really crazy, because I'm sure not a lot of people that own these companies actually know about this, which is why I want this video to get out to people, because this really makes me mad, because these Chinese CEOs and these Chinese rich people, they are making money off of the sole factor of screwing US investors out of so much money. Like, so much money. It blows my mind. But all right, so some factors of the Cayman Islands. So Cayman Islands entities in general have no statutory financial reporting requirements. Under the laws, as a condition of maintaining their license, The directors must file audited financial statements for the company's year end with the Cayman Islands Monetary Authority. So what that means is all these companies need to do is put out yearly financial statements. There is no quarterly regulated, no one's regulating these quarterly documents. So there is no incentive for these companies to not lie to US investors through their SEC filings per quarter and put whatever the hell they want just to make their stock look like this beautiful blossoming flower that everybody in the US wants to be a part of. It blows my mind. Blows my mind. Then again, the only way that a Chinese internet, telco, or media company can get foreign investment is by incorporating in an offshore entity and then establishing a VIE structure locally. I think that this all blows my mind the most because I think that this could all be stopped if China just let them have foreign investment. But if you have to go offshore, then you see the possibilities and the opportunities to do this activity. Like, think about this. These people know that they are not going to get prison time. They're not going to get sued. They are just looking to benefit themselves. They are trying to make money for themselves. And, blows my mind. But let's get into the actual filings. All right, so here's Luckin Coffee. This is right off the SEC website. You can go off the link on that second slide under TAL SEC filings. You can look up any ticker you want, anyone. So right here, State of Incorporation, Cayman Islands. So when I saw that, because I was doing a lot of research because I wanted to try to find connections between Luckin Coffee and any of these other Chinese companies. When I saw Cayman Islands, that was a huge red flag for me. So then I started looking. TAL, Cayman Islands. And I can list off, I looked up probably over 50 Chinese companies that were incorporated in the Cayman Islands. Bilibili, IQ, Tencent Music, Tencent Holdings, Baidu, Alibaba, Huami, Pinduoduo, ZTO Express, BGNE, VipShop, GSX. Like, it's crazy. All of these companies that say they're Chinese companies, they are from the Cayman Islands, and you do not own any of the operating company. You own a sole entity. And we're going to get into those VIE structures soon. Right here. So here's the Luckin Coffee VIE structure. So basically, Luckin Coffee Cayman Islands. This is what shareholders would own, okay? This is what makes money. Everything down here is what makes some money, okay? And for the sake of Luckin Coffee, theirs is actually not that bad. So because you can see, their owner or their CEO really doesn't have much power to take any of these from the shareholders, because see, these dashed lines mean contractual relationship, aka contractual agreement. So this is like the only one. But it's a crazy thing to see. There's so many of them. But so you see this one, a lot of black lines, this is actually a pretty good one. But that being said, they still inflated their revenues, and it's a fraud. And who knows how many of these are going to come out in the next year or two. You know what? The number blows my mind. I don't really know, but we're going to see. So now we're going to take a look at TAL's VIE structure. Okay. So this one looked a little bit more confusing, but so basically, companies own, or shareholders own this right here. Okay. Which, yes, is directly linked to this and all of these. But every single thing down here, 7 schools, 49 schools, subsidiaries, all this is all through contractual agreements. Those can be taken away at any point. And I'm not saying they're gonna, but what I'm saying is, with something this crazy and this freaking confusing, there's a great chance that this company is committing fraud. Because if you watch the video, it's a 13-minute clip on TAL through Muddy Waters research, and basically the way that they were making money out of literally thin air was they would take parts of this. So like they would take parts of these, I don't even know if I can find it here. One of them was a one-on-one like schooling technique or schooling structure, and it was like one of these. They'd sell this, let's say it was this one. They'd sell this to a different company, okay? Then later either acquire that company for much less than they sold this for, or the company who just bought this piece of like business for almost 50 million, like for more than $50 million, would return it because it just didn't work out. It makes no sense. They did this on multiple occasions. It's proven they've done this on multiple occasions, and that literally just brings cash into their financial reports out of thin air. There is really no cash being exchanged there. I'm sure that that was all just fake. It's a classic straw buyer. If you don't know what a straw buyer is, do some research on it. I didn't include it in here. This looks like a classic straw buyer to me. All right. So Muddy Waters research report, summary. They basically called it out. They called out Luckin Coffee being an utter fraud. They actually went to China, put cameras across the street from some Luckin Coffee stores, and over a course of a few months, they saw there's no way that they are creating this revenue, having these customers, when I can see who was going in and out of that building every day. And like I said, January 2020 was when this report was published. 2 month and a half, 2 months later, Luckin Coffee dies 85%. Listen, I'm not trying to sell anybody on shorting these. I'm just trying to get the news out. Let's go to TAL. Oh, this is TAL's Muddy Water Research. All right. Short, whatever, summary. The value share skyrocketed from 900 million to close to 7.5 billion. Imagine that. Why wouldn't he not do that? He's winning in both situations. He's making money. He's winning. There's no way in this situation he loses, because there's a very small chance he goes to prison or serves any time. And like they said, although it is a real business, unlike these China hustle businesses who actually literally were not businesses, they were fake. It has been overstating its profits since 2016, so who knows how much money this business really brings in. And on top of that, if this comes out that they've been overstating revenues since 2016, who in their right mind would want to buy this stock? Who would want a stock where they were lying for 4 years now, and you're buying a company knowing it's built on lies? Regardless if you get it for $7 on the first tank, it's built on lies. Who knows if they even have the earnings potential to ever even get back up to 20? Who knows they have the earnings potential to stay at $7? What if this company should be at 2? We don't know, because they lie. Blows my mind. But we estimate that during fiscal year 2016 through fiscal year 2018, TAL has overstated net income by at least 43.6%. Our estimates of profit inflation are based only on what we are able to quantify. Fraudulent profit inflation likely exceeds this estimate. So basically what they're saying in nice terms is at least 43.6% of their net income was overstated, and that is all they can quantify. So that's all that they can actually pull out of these financials and find. Who knows what kind of numbers they can be? They could have been making up so much money out of thin air that we don't even know about yet. But you know what? People will get down to it. I know it. I know that there's no way. Luckin Coffee being investigated and probed was a great sign for anyone who thinks that these Chinese companies that are fraud are going to come down, because if they did it to Luckin, they're going to do it to TAL, they're going to do it to IQ, they're going to do it to GSX. It's only a matter of time, guys. Patience is a virtue here. Just some more, we believe the fraud pervades the core PU business and it's migrating into TAL's online businesses. So they just think that it's kind of everywhere in this company. It's everywhere. It's making up almost, a very big chunk of their revenue. Is just crazy to me. But move on. This is right here. These are a lot of numbers for anyone who wants to check these out. Basically, to summarize this, they're estimating that TAL has fraudulently overstated its fiscal year 2016 and fiscal year 2018 results. Operating profit by at least 21.6, pre-tax profit by 39.8, and net income by at least 43.6. This is crazy because, like I said in the previous slide, these are the percentages that they come up with for all they can quantify. Who knows how much more is underlying there when an investigation happens? We have no idea. All right, guys, so wrapping this up, quick summary. TAL has been providing inflated revenues ever since their rise back in 2016. And like I showed earlier, in 2015, this was a $7.50 company. This was not a $50 stock. This was under $10. So if this comes out and they were inflating their revenues, they get an investigation probe. What's holding this back from falling back to at least $10? Nothing. TAL has sold certain parts of their VIE structure to record capital gains, then either mysteriously bought the company they sold the certain structure to, or the company who acquired the structure returned the business because it just did not work out. This is the most classic straw buyer I have ever seen. This right here is a straw buyer, where a third party pays or buys so you can inflate your revenues and make money out of thin air just to have capital gains that'll intrigue US investors to pump your stock. Final. TAL is only a matter of time until we see a massive sell-off on news of an internal investigation, just like Luckin Coffee. When it comes down to it, I don't know when it's going to happen. They're supposed to report earnings on April 23rd, next Thursday. Who knows? Maybe they do report. I don't see them reporting if they report earnings, either they're going to just lie again or they're going to report the most god-awful earnings I've ever seen and try to get away with, oh, we're not lying anymore. Well, no, you lied for years and years. I think that day we'll see exactly what Luckin Coffee did. What Luckin Coffee was doing was they were supposed to report 3 times and they didn't report on any of the days. None of the days that wasn't estimated for their report, none of them they reported on. Then all of a sudden it was either the third or the fourth recorrect of the date of their earnings report was when the probe came out. So maybe they're going to speed up the process for TAL. I don't know. We'll see next Thursday, but it's only a matter of time, guys. Lastly, check out the Discord server. Click the link here. Instagram, Twitter. Join our Discord server, guys. We're talking about this stuff all the time. We got a good group of investors. It's a good community. And I'm telling you that if TAL goes down the same way that Luckin Coffee did, there are going to be a lot more of these plays. A lot more of these plays. And I'm telling you that you do not want to miss plays that you can buy for under $100 and on the day of the reckoning sell for $1,000 per contract plus. Insane. Asymmetric trading is what we focus on at Better Bull. And the asymmetric trading is the fact that, okay, if I throw $100 on shorts on 5 of these Chinese companies, if 3 of them end up being fraudulent and they die, what I make off those 3 will outweigh my loss of 100%. Even if I lose 100% on another 2, I lost $200 to make $3,000 to $6,000. Insane. macro trades are where it's at. I know everyone wants to day trade. Day trading's cool. Day trading's good. But macro trades are where you're going to see those 1,000 to 10,000% gains. But all right, guys, thanks for tuning in. Hope you liked the video. Drop a like, drop a subscribe on the channel, and join the Discord. See you guys.
Bitch, we drippin' right. Young white cell, bitch, we living life. Snake.